I got a comment to my video this week that actually made me think some. Let me read this comment and I'm going to talk about it a little bit. It says, your video discussed methods of picking stocks that I used to use. Sometimes it worked. Most of the time I lost or broke even on that kind of stock picking. I'm confident that your methods of investing will be a winner someday. And that's the line I want you to focus on. I'm confident your methods of investing will be a winner someday. Now, number one, the methods that we teach here, they're based on 50 years of academic research. I'd love to be able to take credit for them, but I don't think that would be something that I could ethically do. But let me just concentrate on the idea of success. What is success? Now, am I successful when my investment portfolio is going up in value? Not necessarily. If my portfolio goes up in value 10%, but the market goes up 15%, I would say that I missed out on 5% of returns, that I was actually unsuccessful. Same thing when a portfolio is going down in value. If it goes down in value, is it necessarily unsuccessful? No, not necessarily, because we can't predict when portfolios are going to go up or going to go down. If we could, we would market time and we'd be fabulously wealthy. So we can't predict market direction. But the issue is not did it go down, the issue is did it go down more than it should have? And that's exactly what happens when we stock pick and we market time. If I look at the last 10 years, for example, a portfolio well invested, well diversified, most people lost money over the last 10 years. A well diversified, well mixed portfolio actually had a pretty decent return over that same period of time because there are some areas of the market that are up 300–400%, but most people didn't own them because they weren't the hot categories in the late 90s. Well, let's look at stock picking and market timing and how well it's done over the past couple of years. Now, I did a whole video on this earlier. It's actually, I think it's entitled, Is Buy and Hold Dead? And you can actually watch that. But I got some more recent numbers here on 3 categories that I just chose at random to see what's happened. Now, large value stocks are an area of the market that you can invest in. There are 159 funds that met the criteria of large value, basically invested in the U.S. and so on and so forth. Now, the average large value fund through 2008, 2009, 2010, now 2008 was a really, really bad year, so that's why I started at that point in time, these funds had an average turnover of 74%. Now, I also chose small blend stocks, and the average small blend fund had a 75% turnover rate. That tells you how much buying and selling is going on. So that's a fairly high level of buying and selling. And then I took international large value stocks, had an average turnover rate of 58%. Now, what I did is I said, well, what if I threw $100,000 in, and I spread it amongst all these different funds, large value, small blend, and international large value. What I found was that using funds like we use that don't gamble with investors' money, don't stock pick or market time, they actually lost $10,500 less than these funds did. So I would actually look at that and say, there is a sign of success that the funds that invest in the ways that we prescribe here actually lost less money. Now, the other way, it goes the other way as well. When markets are going well, what we find, as I've shown in many past workshops, that the funds that don't gamble with people's money tend to do much better on the upside as well. So that's a new definition of success for you, and hope that helps. If you got more questions, by all means, put a comment at the bottom of the video. It might be the next video that I end up doing. Thanks a lot, and we'll catch you next time.